Hello everyone. This week's focus is US Tech 100. Trading started quietly with the US on holiday, but markets were anything but calm beneath the surface. So let's check the technicals. We can see on the US Tech 100 daily chart, since the sharp drop from October all-time highs, every time bulls tried to rebound, momentum stalled around 25,800, creating a repeated and very visible resistance ceiling. At the same time, each pullback held slightly higher than the last, forming higher lows and building a rising lower boundary. That's a classic sign of tension building in the market. Also, we can see prices compressing into a clear triangle pattern. That tightening range told us a breakout was coming. Now, the only question was in which direction. Last week, as geopolitical headlines around Trump's tariff threats toward Europe began leaking into markets, that tension snapped to the downside. We saw a clean break below 25,500, along a price gap, both of which are meaningful bear signals in a market that has been relatively resilient as strong earnings came out. But now prices has dropped to test 25,000. That's a key psychological and technical support. And if this level fails, the next area to watch is around 24,500 and major support is next at 24,000. That said, markets often retest major breakout zones after sharp sell-offs especially and especially when a gap is involved. So a bounce back toward 25,500 is possible, especially when Netflix and Intel earnings comes out this week, which could shift attention back to fundamentals in case they support bulls. For now, unless bulls reclaim and hold above 25,500, the short-term bias remains under pressure.